Why market now is still bullish is because people anticipate that next year Jerome Powell may step down. Market seems like ignoring Donald Trump already. After the taco concept come out, Trump always chicken out. AI adoption still driving demand. So from Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the stock market. Alright, we'll cover the market highlights, major stock market indices performance, and also the upcoming opportunities and risks out there. And of course, towards the end of the session, we'll wrap up with the Q&A. Alright, so are you guys ready? If you are ready, you may type in the chat. Alright, just an important note before we proceed. Whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know that we are not a licensed investment advisor and we do not manage customers' fund. We are an educational institution, so our purpose here is to educate people so that you can make your own decision and be your own investment manager. That way, you have a better control over your decisions and be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. Okay, as usual, let's start with the market highlights. So what happened in the month of August? All right, so first of all, let's have some updates on the trade war. All right, so as we know, since the April time, after the Liberation Day, Donald Trump or the US has been imposing tariff all across the world for all their exports to the US. All right, so what are the latest developments here? So first of all will be more and more trade deals has been done over the past few months. Of course, the last market update we have been updating about Japan, South Korea, Malaysia, and even like different countries like China also making progress. But of course, China has been delayed. And what latest we have here is based on the past week, it will be 25% tariff on Indian imports to United States. All right, so it's higher than the original expected, around 20 something percent, 24. I think a few 1% increase, a few percent increase from the original. And why it become higher is because due to the India's purchase of Russian oil and also Russian weapons. And US do slap more tariff for them due to this. And this escalated the tension between US and also India. And it do affected some of the US stocks, like for example, Apple, which they have a lot of, they have iPhone factories that are building iPhones that export to the United States. So the tariff do affect Apple. However, Tim Cook did meet Donald Trump, and the stock price recently has been turned around. All right, and next one will be, other than all these trade deals, Donald Trump also come out with a universal tariff, which means that even though they already signed all the trade deals, but it's a reciprocal increase type or monitoring type, which means that if, let's say, in future, let's say the country that already have a trade deal with the US increase the tariff of United States goods, then the US will do the reciprocal tariff on them again by increasing the tariff, import tariff for the United States also. All right, so it's a reciprocal system that continue to monitor other country as well. So what they do is continue to like having, I think, even though they have a lot of trade deals, but the trade uncertainty are likely still there because of this all these different tariff progress or the latest reciprocal status. All right, and other than that, he also planned to come out with a pharmaceutical and also semiconductor tariff as well. And we can see that the semicon one already quite clear. They want to tax 15% of NVIDIA's and AMD's revenue for their export to China. All right, so it's a two model GPU tariff for NVIDIA and AMD in order for let them to continue sell to China. All right, and then in that they also relax some of the semicon export restriction. For example, they allow certain models of NVIDIA GPUs to be shipped to China. And also AMD also some models approved to be shipped to China. And also at the same time, they relax some of the export restriction as well. Some of the software allowed to continue their services and support to the China customer. All right, so these are the trade war updates. And do watch out for more announcement time to time, because we still have China, which is not yet fully have a trade deal with the US. All right, it has been postponed. And next one will be the tech earnings. So regarding the tech earnings, over the past month has been a peak season of earnings season. And from the earnings itself, we do see that Microsoft, Meta reported strong earnings. So as Google also reported strong earnings, and Amazon, despite gapping down, recovered strongly also due to strong data center earnings. All right, and what we can learn from all these big techs earnings is their cloud demand is very high. And also at the same time that they are going to continue to expand their AI capacity, which means that more AI capex expected in the future. So all these AI related stocks, like for example, NVIDIA, AMD, all these semicon stocks likely may still have some additional revenue or upside. Depends on the capex of all these big tech giants. So as we know, as we know also from the earnings, they also mentioned about under capacity, which means that currently their AI capacity is under capacity, which means there is more demand than what they can supply. All right, so in this case, they may continue to upgrade their cloud or in AI infrastructure and also the capacity. Hence, they may spend more money on all these GPUs and also data center related infrastructure hardware. All right, and other than that, this month, end of this month, 27 August, we will have a major earnings from NVIDIA. So as we know, NVIDIA is the AI chip leader in the market, and they are going to have an earnings in 27 August. And this may move the whole AI industry because NVIDIA is one of the key major player for AI. And other than that, early September, 4th of September, we will also have Broadcom earnings. All right, so Broadcom is one of the key AI provider as well. They do provide all these network infrastructure chips and also a lot of custom-made, they call it XPU, which is a custom-made GPU or AI accelerator for all these data center. So if you are investor or you are active traders, then you may watch out for this date as well, because if you are holding, or let's say for example, if you are NVIDIA investor or you are Broadcom investor, then this is important announcement for you guys. And of course, it may also tell us whether how the AI world will be going to have any forward-looking, whether their forward-looking statement will also give us some hints or forecasts about the upcoming AI trends and so on. All right, other than that, how many of you has been following the recent political drama by Donald Trump and also the latest Fed situations? You may type in the chat as well if you are following. You may type me if you are following the latest trend. So the recent headline will be more about Jerome Powell might be stepping down next year. All right, May next year he might be stepping down, and once his term is reached, they may want to find a replacement. They don't. Seems like Donald Trump are pressuring him to step down, and according to his original term, also it will be due next year. So next year likely they may find a replacement, and overall market are anticipating that they may find someone more dovish, which means that someone more keen to cut interest rate. And overall market has been bullish due to that, because Jerome Powell, as we know in the past, has been quite cautious in terms of rate cut. He wants to see more data. But Donald Trump has been pressuring him all this while, all right, since last year after he became, late last year after he became president, and when he inaugurated this year, he has been talking about rate cut. He wants the interest rate to be lower. And Jerome Powell has been pausing the interest rate over the past few meetings because of the inflation figures. So this hoo-ha has been going on, and Donald Trump did a few times tweet that he want to he said like Jerome Powell is slow. He said Jerome Powell refused to cut rate and so on. So people may anticipate, overall people anticipate that the replacement person could be more dovish, which means that more keen to cut interest rate. And overall the market has been reacted bullishly, and overall the market also see that the rate cut may happen sooner or later. And all eyes will be focused on this September's FOMC, which is the Fed meeting. So whether there's a rate cut or no rate cut, this meeting will be very, very crucial, including the projection as well. All right, and other than that, let's go through some of the economic indicators. So for August month, we do see some mixed economic indicators. For example, we see that inflation is lower than expected, even though it came in 2.7%, similar as the last data point. But overall market expect that the inflation could be higher. All right, so the inflation could be higher. The expectation is higher, but my expectation versus 2.7 actual data. So the market reacted bullishly. Hence, you can see that the market break the high again after a recent few days pullback. All right, and also at the same time, we do see a weaker than expected jobs data. All right, so if you see lower inflation and also weaker jobs data, so what do you think the probability of a rate cut, if let's say based on these two data? All right, and with the weaker non-farm employment data also, anyone of you heard of Donald Trump fired the Bureau of Labor Statistics chair because of this? All right, you may type in the chat as well if you come across this news. Yeah, so Donald Trump do fire the Bureau of Labor Statistics chair because of the data. He said that they manipulated the data. But if let's say we do see a lower inflation and also a weaker jobs data, it could point towards that if let's say the next data point still weak, the next inflation point still okay, then the Fed may consider to cut interest rate. Hence, it increased the probability of rate cut. However, a few days later after this data, the strong PPI data, also producer price index, is a PPI data. So usually it refers to all these producer price, that the factory side, whether the costing price, the raw material price for the factory is increased or decreased. So a strong PPI data is a leading indicator for inflation, because if let's say the factory side is having a higher raw material cost and higher labor cost and so on, it may pass to the consumer side. All right, usually 50-50. Usually 50% may absorb by the company, 50% may pass to consumer in general guideline, but sometimes the manufacturer may choose to absorb all of them themselves. All right, so this is a leading indicator for the inflation, and it show that, all right, so the inflation could continue to go higher if, let's say, the PPI continue to go up. All right, so in this case, you can see that the market did pull back a bit after that, and now currently hovering near support level as well. All right, so with all these factors that are happening over the past few weeks, then how do we see the market? All right, so first of all, the market are still bullish. They continue to break new highs. And what we notice here is sector rotation ongoing as well. All right, so for those of you or our students that trade quite a while already or have some experience, you may notice that recently the tech stock has been more weaker compared to all these over penalized stock or those that are sensitive to interest rate. For example, some of the home builders has been recovered strongly. Retail stock has been recovered strongly, and also some of the fintech companies has been recovered strongly as well. All right, and some of the small cap also recovering strongly. So market now moving ahead of time, anticipating that the Fed may cut rates sooner or later and as close as September, because the Fed fund futures, which is tools that futures traders, interest rate futures trader use to forecast the rate cut probability, point towards more than 80% of probability that September there might be a rate cut. Hence, you can see market move ahead of time. All right, so anticipate that there's a rate cut happening in the future. Hence, the market start to rotate into sectors that are interest rate sensitive. All right, so as an investor and trader, what we can do? All right, so investors, of course, you can wait for good deals. When there's a pullback on all these major tech giants, you can do your own homework, valuation, and gauge that whether it's a suitable entry level for you or whether your own trading plan or your own investment plan already fulfilled or not. All right, and for traders, you can choose to trade short term as the market is very stretched level now. We also don't want to jump in too soon. All right, so in this case, traders may trade intraday or swing trade, or even trend trade some of these the stock that I tell earlier, like for example, like the sector rotation into all these interest rate sensitive stocks. So if you are our students that has been equipped with all these systematic trend trade strategy, so you could have detected a lot of trend reversal in all these home builder sector, all these small cap sectors, and also some of the ETF as well. All right, so but now market is at an all-time high level again, then it's at a stretch level again, then it's time for us to be practice patient also. All right, so monitor and be patient, and at the same time, do your own homework. All right, then other than the overview, let's take a look on the stock market performance for different countries. So let's take a look on the global major countries' stock performance. So first of all, we have the Nasdaq 100 that represent the top 100 tech stock in the United States. And then we have S&P 500, which is representing the top 500 stocks in the United States. And over the 10 years, the return has been good. We can see that over 400% for Nasdaq 100 and over 200% for S&P 500, and average per year will be around 40 over percent and also 20 over percent. All right, and the Nasdaq and the S&P 500 has been Nasdaq 100 and the S&P 500 has been breaking new high, and with all these trade talk stabilizing and also strong earnings from all these tech stock that more and more capex are continue to be forecasted, we can see all these AI chip stock, AI major tech are rallying in the past few weeks, but recently has been slowing down. We can see the momentum are slowing down. And we can see that the market has been rotating into all these interest rate sensitive sector. And as an investor or traders, you can actually balance out, like whether if you know trend trade, you can trend trade all these trend reversals in all these interest rate sensitive stocks, and at the same time waiting for opportunity for investment opportunity or trend trading opportunity on all these tech stocks as well. All right, so do your homework, practice patient, and wait for the overall market pullback. All right, and of course, if you know the short-term trading skill, like for example, swing trading or intraday trading, of course, you can still trade those opportunities while waiting for a more major pullback or investment opportunity or trend trading opportunity. All right, so I would say plenty of opportunities still in the market, and overall, rate cut is good for the stock market. All right, so if let's say market expect a rate cut, I would say overall market view may still bullish, but later I'll share you some fact also. There could be some pullback during this month or next month, because based on the seasonal pattern or historical data, August, September tends to be a more bearish month. All right, and China, next one will be China. So China index recently has been bullish as well, and with the rate cut, with the rate market expecting or anticipating a rate cut, there's some major global fund movement as well. So other than sector rotation, there are some global funds flow as well, and we do detected that some of these funds flow into Asia region. And one of the region they flow in is China. Even though China, the economy has been still slowing down, but the market, overall market, expect a stimulus by the Chinese government to be continued, and potentially there may be more funds flowing into Asia region. I would say not China alone, but overall Asia market. All right, but China, however, still to remind you guys, is like China are still a volatile market, and stock market will easily affected by the government policies. For example, in the past, if let's say the government go for a common prosperity goal, then they may penalize all these private sector company like Alibaba in the past. All right, in the past, Xi Jinping has been implementing all these common prosperity policies, and they do punish some of these dominating tech company in the China private sector. So do watch out for that. And at the same time, China still in a property crisis. I would say the property issue still haven't recovered, and the economy still have some problem. The slowdown are still there. The consumer spending are still slow. The retails are still slow in China. All right, but of course, there are still some great stock in China, good stock in China. So you may watch out for that. And if you are experienced, then you may also diversify some of your investment to China market. But I would say overall, US market is still providing the most consistent return. All right. And also something to take note is China still have geopolitical headwinds. For example, you can see a lot of sanction, a lot of export bans still implemented towards China. And also there's still tech war between US and China. So time to time, you may see some volatility in this region or this stock market. All right, and the next one is Hang Seng market. So Hong Kong market also recovered strongly recently, near the few years high, I think the 3 years high recently, near the 3 years high recently. And they also fueled by a few good factors. For example, the more certainty on the trade war and also tech war. And also at the same time, Hong Kong do implement also Stablecoin Act. They call it Hong Kong Stablecoin Act. And some of the some of the crypto or the stablecoin related stocks has been rallied. For example, some of the brokers in China or Hong Kong has been rallying, or some of the involved company that involved in this Stablecoin Act project has been rallied as well. All right, but of course, like I mentioned earlier, they also affected by all these geopolitical headwinds because China and Hong Kong are closely linked together. All right, and Hong Kong at the same time not only influenced by China, they may also influenced by the US stock market. All right, and same as China, the economy in Hong Kong has been slowing down recently as well because they are affected by overall China and also international trade. However, like I mentioned earlier, recently we do see that some funds rotation into the Asia market region, and they also benefit from it. All right, you can see the index has been going up. And next one will be the KLCI, FBM KLCI, our KLSE market, our local Malaysian market. Recently has been rebounded, and if you're active in Malaysian stock market, you can see that our index also shows some trend reversal. All right, so this shows that potential funds are rotating into the Southeast Asia region as well. And if you are from Singapore, the stock market has been bullish as well. If you are from Indonesia, the Indonesia index also going up, and Malaysia also benefited from this. All right, Malaysia stock market also rebounded recently, and Vietnam market also rebounded recently, and especially after the trade deal. All right, Vietnam has been quite bullish as well. But of course, these are the niche markets. So Vietnam index, I'm not sure how to. I don't know much broker that offer that as well, and you need a special permission to access the Vietnam market and so on. So what we can focus as a trader or investor, you may focus on all these Malaysian market or even Singapore market if let's say the funds are flowing into the Southeast Asia region. However, even though I said that the funds rotate into the Asia market, but rate cut is good for overall stock market, which means that United States stock market may also still perform, all right, under these rate cut themes, because overall we still see a lot of great company in US. All right, so from the overall comparison of the return of the statistic here, so which market provide you the most consistent return over the 10 years? If you are looking at long term, so which market provide you the most consistent return? You may type in the chat as well. And for investor and trader who are looking for high growth, all right, for those of you that are looking for high growth or more stable high growth, the US market will still have more high growth companies, and also at the same time, they have strong fundamental as well, or strong financial balance sheet as well. All right, and also if let's say you take a look at all these recent trends, like for example, AI, so what are the companies that are leading in AI coming from? All right, so you may type in the chat as well, what companies that are leading in all this AI industry that are from which country? All right, so all these AI leaders are from which country? You may type in the chat as well. All right, we can see that all these still from the US brands, and of course, in the traditional famous brand, like the global brands, like for example, Apple, all of them, Apple, Microsoft, all these tech giants, all these famous brands that we use daily are still coming from US as well. Hence, I would say that US providing more consistent return and also more predictable returns. And of course, the companies in US also will have tends to have a higher earnings growth. All right, and I see some of the question in the chat earlier on. So yeah, so even though I'm saying the overall market still bullish and we are at mid-August, almost end of August, but we are past mid-August. So, but I would say the seasonality patterns or the historical data still tell us to be cautious. All right, so as an investor traders, we do have our own systematic way or our own process. But based on the data, also we may want to stay cautious and make sure we manage our existing position, make sure we manage our risk. So this is the data of S&P 500, which I use the SPY as a representation. SPY is an ETF for S&P 500. And also we have QQQ, which is the Nasdaq 100 ETF. And from here, I do extract some of the data over the past 5 years. So this is the past 5 years data. And all these bar represent the percentage of the month which the SPY or QQQ closed higher than it opened, which means that if let's say we track 1st of August to end of August, what is the percentage or probability of the S&P 500 or the QQQ close higher compared to first day of the month by end of the month. So you can see during July, when we have earnings season, it's 100% probability that the month end at the high for both indices, all right? So 80% for QQQ, 100% for S&P 500. So which means it's a bullish month. But if we compare August, September, and also October, what do you see from this data? All right, so let me just put up the box. So if we compare August, September, October for both indices or both SPY and QQQ, what do you notice about the percentage of closing higher? Is it 100%, 80%, or it's like 50-50 or even lower? All right, so from here we can see that August tends to be more bearish and September even more bearish. All right, if in the past, only 25% of the time in September, the index closed higher compared to early of the month. All right, so in this case, as an investor, of course, we want to be more cautious when we are going into this seasonality low. All right, so as we usually talk September dip. All right, but of course, it doesn't mean it's the dooms and gloom. So we may manage our existing position, make sure you have a proper exit plan or exit rules with you, a systematic exit ways. And as it comes to September, if let's say there's a dip, all right, of course, you may have more opportunity as well, because what we notice here also is after September, November, December tend to be a more bullish month as well. So you can see that the percentage came up again after November or during November and also December. So what does it mean is there could be opportunity for us during September and also October. So do get yourself ready for that. If let's say there's a major dip, make sure you know what stocks you are monitoring. Make sure you do all your homework, the valuations, you are familiar already, well planned on what you want to execute and so on. All right. And of course, if you don't have a systematic way yet, then it's the best time for you to learn while waiting for the opportunity to arise as well. All right. So other than that, another factors will be the money on the sidelines. So this is a money market funds chart. And what is a money market funds is usually just like our fixed deposit rate. So usually when all these institutional funds or all these funds, when they have cash position, so they also don't want to just sit on the cash and without earning anything. So usually they will park in the money market funds, whereby it will give them a fixed return rate. Just like when we have additional cash flow, while waiting for the stock market to pull back, we also keep our cash in the fixed deposit and earn some interest rate through it. All right, so same for the institutional funds. They also park in the money market funds, all right, to earn some interest rate while waiting for the opportunity or waiting to rotate into a more higher return asset. And one of the reasons why the money market funds still keep going up, now almost like 7+ trillion already, is because of the high risk-free rate. So just imagine now the United States interest rate is around 4.5%. So you, by doing nothing, you're already securing close to 4.5% kind of a risk-free return. So of course, if let's say those are more conservative funds, they will prefer to park on all these safer asset or the risk-free asset to earn all this risk-free rate. All right, but of course, if let's say we have a rate cut, let's say the Fed start to cut interest rate aggressively, let's say from 4% cut to 3 point something percent, then situation could be different. All right, things could be different because the risk-free rate no longer that attractive. All right, so all these funds may flow into other markets, for example, flow into bond market to secure higher yield, or flow into stock market to secure higher return. For example, flow into high growth stock, flow into the dividend stocks to earn dividends, and so on. Because at that, if let's say the interest rate drop until a certain point, the risk-free rate return may not attractive already, and they may need to rotate into all these different assets. All right. And if let's say September we have a rate cut, then it may be the start of the rotation. It could be only, it's not a 100% sure thing, but it could be the start of the rotation. All right, so you may watch out for that. And currently the probabilities of a September rate cut are high. Like I mentioned earlier, if let's say you know where to refer to, like all these Fed fund futures, so it's pointing towards more than 80% kind of rate cut. All right, but of course it still depends on the Fed as well. And why market now is still bullish is because people anticipate that next year Jerome Powell may step down. And no matter how, if let's say this year don't have rate cut, next year likely there will be rate cut already. So it's a problem like sooner or later. But of course, if let's say September we don't see a rate cut, market could be more volatile, could be have a pullback as well, because now you can see the movement already factor in that a potential September rate cut. And it depends on the FOMC outcome of the September meeting. The projection, the press conference on the Fed are very important also to see whether the market have momentum to continue to go up. All right, and lastly will be what to focus. So I've shared a lot of information. So what to focus on this coming month in September. So as an investor, usually we evaluate our risk first. Of course, all these risks may not happen, but we need to evaluate the risk first so we don't overconfident and expose too much of our risk as well. All right, for those of you that learn about risk management, you know that we only risk a certain percentage of our total capital. All right, so inflation trend, tariff are inflationary, so do watch out for that. With all this tariff ongoing, it could be still contribute to inflation. All right, and all this inflation may cause slower growth. All right, so inflation if continue to go up, it may cause slower growth for all these company and overall economy. All right, and we still have geopolitical tension as well. So tariff uncertainty is still there, even though we see a lot of good trade deals coming out, but it's still there. And China haven't settled any trade deal with the US. They postponed the talk. All right, but things are improving. For now, at least you see Japan, Europe, UK all are having trade deal already, including India. And geopolitical tension also easing. So how many of you heard of the meeting between Donald Trump and Putin over the last weekend in Alaska? So it's a good progress for the peace talk as well. And the war are de-escalating. But of course, Europe, the Ukraine-Russia war still ongoing. And the Middle East are still having some tension there, but things are getting better. And also we have a US-China tech war. I would say among the risks here, this one is the most important now because China has been catching up in terms of the tech developments, all right, especially from Huawei and also SMIC. Even though they are still behind, they are catching up. And from official news, we do see that they are still behind. But who knows, in the underground, they has been working up very hard and catching up without doing much announcement. So China has been very quiet recently. So among the major news I see, not much official news except those are from Western media, and they has been still saying China is still behind 3 to 5 years. All right, but in actual, maybe for those of you that work in the engineering firms that are dealing with China a lot, maybe you should know that where is the semicon now. But I would say China used to be catch up very fast. All right, in terms of in the old days, you can see that historically they tend to catch up fast. So do watch out for that, and as part of the risk management, you may want to monitor this side as well. And with the China urging with the resume of the exports of the NVIDIA chip and AMD chip to China, China government actually urges their companies not to use NVIDIA chip due to national security also. So they are using the same trick to the US companies. And lastly, with the political risk, so more and more political drama from Trump recently, the firing of the Bureau Labor Statistics chief, the attempt to push Jerome Powell to step down, and all these different files if you're following the political news. So all this anytime could cause some volatility. But for now, good thing is market seems like ignoring Donald Trump already. After the taco concept come out, Trump always chicken out. All right, so this is good thing for it. But overall, the risk, I would say, is around this major topic. And next one will be opportunities. All right, so what we can focus on, or what are the potential opportunities out there. All right, of course, the AI adoption still driving demand. So from the latest big tech earnings, we still see strong AI capex from this company. They're talking about still under capacity. They are pumping up their infrastructure. So this could be still good for all these AI related stocks. And also big tech earnings reporting strong tech earnings. Strong cloud demand, improving monthly active user in their AI platform. So these are good news for all these AI companies. And other than that, macro trends also tell us companies are moving into sovereign AI. So America have their own AI action plan, and a lot of countries start to come out with their own sovereign AI because they don't want to rely on foreign AI. They don't want to host their sensitive data in United States or host in all these tech companies. They want to host the data on their own server, own AI. So you can see that governments start to invest in all these sovereign AI, their own AI. So US invested in that. China also doing that. Taiwan also doing that. Japan also doing that. And even Singapore also doing that. All right. So as a government, of course, you don't want your sensitive data to store at someone else's place. All right, but someone else have AI also, you also want to have AI. So you need to have your own data center to store all your own sensitive data. All right, and this boosts demand as well because nowadays country or government also spending AI hardware, all right, or infrastructure, building all this infrastructure. And the fourth one will be the inference demand, which means that the reasoning to AI. So as we move into agentic AI, so in the past, a lot of training, all right, a lot of training has been implemented and a lot of hardware spent on training. And now it's about interaction or inference. So agentic AI, automation of tasks. All right, if you work in corporate, you can see that more and more companies are moving towards AI, building their own agent AI, agentic AI to serve the customer, serve the employee, or maybe replace some of the employee as well. All right, so this also spark demand for all this AI hardware and also even demand more computing power and memories. All right, other than that is the Genius Act. Genius Act is a stable coin act by the United States recently signed into law, and also One Big Beautiful Bill Act that signed into law as well. And what are these covering around will be financial deregulations. So deregulation usually good for all these financial institute and also fintech companies. All right, so deregulation. Major themes will be deregulation and also some defense spending. All right, and like I mentioned earlier, high probability rate cut in September, over 80% probability now. So what are the beneficial industry will be all these interest rate sensitive industry and sectors. All right, so if you're active in the market, home builders has been rallying, retail has been recovering, emerging stock has been recovering, and also small caps. But of course, these are different world of investing. So for those that are familiar with high growth tech stock, when you come to this sector, you have different parameter to monitor. You have different kind of industry understanding to understand as well. All right, so all these different industries, different sector will have their own unique financial parameter to monitor. All right, and with the One Big Beautiful Bill Act become a law, so AI is one of the key themes, defense, all these AI missiles and also drones, smart drones and so on, smart weapons and so on. And also, of course, financial like brokers, fintech and others. And of course, lastly will be industrial. All right, so with all these trade deals, you can see that Japan going to invest 550 billion in the US. Then South Korea also same over hundreds of billion in US, and Malaysia also purchasing more Boeing jets. So if let's say more and more investment going into US by building factory there or purchasing their planes and everything, this likely may benefit the industrial because you need to build factories, you need to build planes. All right, so industrial is one of the key sector as well. All right, of course, this is just a 30-minute market update and I have been slightly overrun, so we cannot cover everything here. All right, so we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and also safe way. All right, so we have the most systematic course in the market. We have process step for every trading style we cover. We have versatile strategies to handle all the market conditions, be it long-term, mid-term, and also short-term. And also we have a safe approach with proper risk management. And with the historical data I shared you just now, so we know that September likely could be a bearish month, but it doesn't mean it's bad for all of us, because sometimes a dip is good for all of us because opportunities comes when the valuation are lower, when an opportunity usually come when they are more uncertain. So while waiting for the dip or the pullback, this is the best time for you to prepare yourself and learn a systematic way to trade or invest to capitalize on the upcoming opportunities. And of course, you need to plan more time to practice and pick up the skill set as well while waiting for the opportunities. So get yourself ready when the opportunities come. All right, we have a hybrid class for the workshop. We have face-to-face, we have online as well. So do join the 3-hour webinar to find out more. Our next webinar will be on today, 7:30 p.m. or next week, 27 August, it's a Wednesday, 7:30 p.m. as well. All right, you may scan the QR code to register. All right, and other than that, I will keep the QR code for a while. So moderator, you can paste the link. So other than that, we also covered advanced courses as well. So we have macro insights that cover the trends and also major macro factors that impacting the stock market. So we do have courses like money supply and money flow, analyze the money supply, money flow, and how it impact the stock market. And also we do cover the relationship between stock, currency, cryptocurrency, bond, and also commodities. All right, so in this workshop, we also cover how funds move or rotate when it comes to important macro factors. So overall, there are 10 macro factors that are affecting the market. And in the industry insight, we do have industry analysis of top 8 industries, including those major trends like AI, semicon, and so on. And also where is the major opportunities and what are the major risks. All right, so we do cover specific industry and stock that will benefit from it. And more importantly, all right, more importantly is to manage your existing position risk. All right. And we also do cover how to screen and analyze all these emerging stocks. And other than that, we also cover how to understand the growth potential and risk analysis of the company via the company insight and do a right price estimation for your valuation. All right, and I would say, like I mentioned earlier, opportunity may come anytime. All right, so even though we know the data that September, there could be a dip, but we don't know when it will happen because I don't have a crystal ball with me. Just like the April Liberation Day. All right, so when the opportunity come, you need to take action immediately. You need to have strong conviction. Maybe you need to be ready at that time. And that time really have a lot of good valuation, a lot of good opportunity at that time. So whether September there's another opportunity or not, could be because the upcoming September, our macro insight topic will be about rate cut in September because the FOMC will be the most important, the upcoming September FOMC will be the most important FOMC for year 2025. And how you would prepare for it and what market anticipate upfront. So this will be a crucial turning point as well. And like I mentioned earlier, interest rate change will usually trigger a global funds flow. All right, some may rotating in the US to other sector, some may rotate internationally. So this will be a major movement. All right, and usually the big money happens in the big move. All right, so big opportunities there. All right, so and also most importantly, manage your existing position, how you can rotate around as well. All right, so get yourself ready. So if you're interested, you may fill in the survey in the QR code as well. All right, and if you found this market update is useful for you, do recommend it to your friend as well. So for now, I'll open the floor for Q&A. So any questions you have regarding the recent market, you may post in the chat, or moderator, you can bring up the earlier questions, which I do see a few, but I missed them out already. All right, so one question. All right, should we concern about the credibility of the Fed in the future with Trump intervention? All right, I would say US, one thing good is about the president has limited power because of the political system. So even though Trump has been pressuring Jerome, the Fed chair, but they cannot directly involve or cannot directly remove him. All right, because the United States have a system whereby they limit the president power also. All right, so in this case, I would say the Fed still have its own credibility. The system are still transparent. He just hoo-ha in front of the media, but you can see that immediately he chicken out or his advisor may ask him, this is violating the law and so on. All right, so in this case, I would say the credibility of the Fed are still there. All right, even they assign someone, they nominate someone else also, it need to go through the proper system also, a proper process also. So it's not like something he can simply nominate his friend to come in. All right, it's not this case. All right, so in this case, the credibility is still there. All right, and the second question, is there a pullback in September? What sector are good to enter for investment? All right, I would say yes, likely based on the data, there might be a pullback in September because it tends to be a bearish month, and we do see the important FOMC also there around September. All right, and what are the opportunities? You may, if you already know how to gauge a chart one, you can still do your own homework. If you have a systematic way or a process, you still can do your homework. Monitor all these great stocks, like for example, the strong tech stock, the mega tech, wait for the opportunity. All right. If you do your homework, you should know where is the great valuation for you to invest or trade, and what are the chart pattern you are looking for, what are the trends you are looking for. All right. And I mentioned earlier in the opportunity segment also, those interest rate sensitive sector could recover also with the rate cut anticipation. All right. So in this case, you can still focus on the strong tech stocks to capitalize on the pullback to take opportunity, and also at the same time do look out for all these over penalized stock. Let's say over the past 2 years, because of the rate hike, this stock has been over penalized, and now it's a good time, it could be turning around. All right, so if you know how to find this stock, you can also take this opportunity to enter all these potential reversal or potential turnaround stocks. All right, and question, okay, so the third question will be, okay, since market anticipating a rate cut and those home builder healthcare sectors start to recover, can we diversify our portfolio investing those instead of all tech? Yes, of course. Usually when we cover risk management in our workshop, so we not really want to cover want to put every egg in the same basket as well. So it's okay if let's say you see some opportunities that still fulfill the criteria for you to diversify or go into all these recovery sector. I would say, yeah, you can just diversify some. Then even before the September, yes, make sure you have a proper risk management, make sure you have stop loss, make sure you have a proper exit point also if they say things doesn't go as planned. All right, and lastly, more advanced question. So will Powell upcoming Jackson Hole speech be more concerned for volatility? I would say with the market, expect him to step down next year. His press conference may not as powerful unless he come out with something very drastic. All right, during press conference, he talked about something very drastic and caused the market to be very volatile. All right, but for now, because of people do see him that his term is due soon, so I would say unlikely it cause a very, very major movement unless he says something very drastic. All right, and one last question is, on one hand, inflation is controlled, but on the other hand, employment is slowing down signal. All right, how do you reconcile this, justify rate cut? All right, so I would say inflation, if let's say under control, coming down, and if let's say the unemployment are coming down, it also shows that economy are weakening. All right, if economy weakening, inflation coming down, then this is the best criteria for the Fed to rate cut. Because if let's say job market are still strong, and inflation, if let's say still flatline, if let's say job market are strong, what do you think? If people are able to spend more, if let's say job market are very strong. All right, so if let's say job market are slowing down, which means that spending may slow down also. So economy may slow down also. So this is, if let's say job market slow down, it actually is a good news for Fed to rate cut, because because the Fed have dual mandate. One is control the price stability, one is make sure maximum employment. So if let's say employment start to come down, that's the time they need to work. They need to cut rate to stimulate the economy. All right, so we'll eat contradicting pullback in September, but rate cut in September, so market will pull back. All right, so you may watch out because sometimes the funds may sell during good news. All right, so if let's say once the announcement, what they buy before the news, then sell on the news. All right, so I don't have a crystal ball, I cannot predict, but historical data, September tends to be more bearish, and this year Fed may rate cut. So you may want to see the chart also. You may want to see how the chart react, how the overall market react as well. All right, but I would say stay cautious and just watch out. Just trade according to your process and plan, and also trade shorter term for now until you get a major pullback. Then you can enter some of the investing or longer term position. All right, so for now, it's a bit like, I understand it's a bit contradicting, but this is based on the data. Historically, September tends to be more bearish, and September we have a major FOMC, important FOMC, and volatility likely may be there if there are major announcements. All right, it could be rate cut, but if let's say the outlook is not as market expected, or the projection may be not as market expected, or it could be the press conference as well, a lot of things can happen. All right, so let's monitor on September. All right, so with that, coming towards the end of my market update. So thank you everyone for joining. So again, if you find this market update is informational to you, useful to you, do recommend it to your friends as well. And see you guys again during next month market update. So see you guys again. Have a good trade, and also have a good investment or trading month. All right, so thank you everyone, and see you again in the next market update. All right, bye bye.